Okay, so having gone through the European cash equity close for the day, just having a bit of a review on things, and I don't want to talk for too long. I just want to really focus on the main story that circulated earlier, and then just one or two of the trades of which the guys here were looking at that time, particularly after the US equity open as well. We saw a bit of volatility and further follow through on a downside momentarily, and a couple of interesting technical levels that were breached that offered some opportunity. So just having a brief then look at what the story was that moved markets, and by this what I'm really looking at here on this kind of cross asset chart mix is, as you can see here on the charts, euro dollar spiking higher, cable same, gold. So this was a real big story when it was released, and something which moved across assets given its importance. And this was of course the Bloomberg report about sources in regards to China. So just to recap for any of you who are joining us and haven't been in the markets today, according to Bloomberg, officials in charge of reviewing China's foreign exchange holdings have recommended either slowing or stop adding to the country's vast US government bond holdings. Obviously, if this was true, wide-reaching ramifications for the dollar-denominated assets, given that Beijing, along with Japan, they basically comprise of the top two biggest purchasers of US debt. This is what it looks like. If you were looking at on a breakdown of major foreign holders of Treasury securities, China sits right at the top of the pile. This was data from the Treasury and Federal Reserve from December of last year. You can see mainland China right at the top, closely followed by Japan, and then there's a significant drop-off when it goes all the way down to third place, Ireland, Brazil, Cayman Islands, and so on and so forth. What does this mean then, and why did the market move like it did? Well, looking at it in a more simple sense, a reduction in terms of the level of purchases from China would come at a time when the US is looking to issue more debt, of course, in response to this fiscal push coming from the Trump administration. And the Federal Reserve, of course, from a monetary policy perspective, are planning on reducing the size of their bond buying program at the moment. They're going through this phase of quantitative tightening. And obviously from a yield perspective, the US 10-year was a little bit vulnerable, just giving that breach, of course, of the 2.5% of which we saw yesterday. We were looking at this very long time frame trend that the Treasury market had been in since 1988. We've basically been trading along this this channel, and on the upside seeing a bit of a breach of it, given the variety of reasons we discussed this morning here, as you can see highlighted from the briefing. So equity markets as well under some pressure. Obviously a failure or any disruption, if you like, to the ability for the US to fund itself draws the US economy into question, the validity of Trump's plans to be pushed forward. And obviously this comes most importantly at a time when equity markets are at all-time high record levels in a lot of regions at the moment, and specifically the US. So maybe a good time as well for investors just to book some profits amid those initial headlines. What was interesting here was that initially we got a run down in the S&P through S1 and close to the initial low point that was seen on Friday, and that actual low point acted out as a key level later on in the session. This was, if I break this chart down in a little bit of a shorter time frame, so here there was an excellent trend line that Sam had identified from the morning, and which we were all watching here at the time. If I go from here through here, this is what we were watching out for, and then consequently a good target for the price action to get to pretty much to the tick. So this is what we were looking at, and if you imagine that this price action here on the far right hand side at the time wasn't existing, and we were watching this tests as it went higher, and it just coincided with the S1. We consequently also saw in the DAX, if I bring that up, it came to a similar type of interesting price level, which was here. So when the DAX, it broke simultaneously with that move in the S&P, and then it shot lower. We saw an extension of the selling, and this came, of course, when the volume was higher, post the open of the New York Stock Exchange open. And then the initial push, we went through all the way down to just below the initial dip on the Chinese circulation of those headlines, and found support right on 36.50, which was that area of support we were looking at back on Friday afternoon. So that was one of the trades I know a lot of people here were looking at and took advantage of, so well done. Likewise, gold offered a similar amount of opportunity as well on that, predominantly the initial break of that news, given the heightened global uncertainty it would create if the biggest buyer in town steps away and stops purchasing bonds issued by the biggest economy in the world. But obviously, as I said, has wide-reaching global ramifications. So that was the story for the predominant move. Obviously, the dollar weakened on that news, and hence you've got this quite explosive reaction at the time in euro-dollar and cable pairs, as you can see in the top left-hand corner. One of the other things quickly to have a look at is oil prices. And so just bringing this chart into focus, you can see here, this was the DOE release that we had, and a relatively contained reaction, and stepping away from short term, looking a bit more broader context of the last 24 hours or so, we've held on to the bulk of the gains that were seen this time yesterday, and also on the release of the APIs. Now, we did of course have the Department of Energy's inventory data. This is what it looked like. We had first of all the APIs last night to set the scene. This was actually a draw. This is a minus 11.19 million, the biggest draw since SEP 2016. So expectations were high for the DOEs to follow suit, and they didn't. In fact, the build was less than half, the draw was less than half the size of what we had last night. So a more bearish outcome. The initial reaction was a spike lower initially, but as you can see, the price of oil recovered relatively quickly. So here, just circled this particular candle there was when the data came out, but we have recovered since. The other numbers, as you can see, Cushing was pretty similar, as to with the other numbers, gasoline, distillate. One thing that did stand out was the fact that US production was down 3%, which is a fairly substantial drop to 9.492 million barrels. So not too much in the way of sustained reaction, but if anything, we have held on to what has been a significant push technically in the last 24 hours as well, because we've managed to surmount the early 2015 highs at around this 62.50 type level, which technically does open up the prospect of some further movement to the upside over the medium term. Okay, so let me just bring up the calendar for tomorrow, and then we'll have a quick discussion about that, and then we'll wrap things up. So this is what tomorrow's agenda looks like. Overnight, anyone trading the Aussie currency, you've got retail sales coming out from Australia just after midnight. Looking at Japan, there was an interesting table that I did tweet and share in the chat room this morning. Let me just quickly show it to you, because just given some of the emphasis that we've had on Japan, and the Bank of Japan's bond buying operations, this slight tweak that we've seen, albeit it doesn't really equate to a change of monetary policy. Don't forget they do yield curve targeting, so some tweaking of purchase along different maturities I don't think is entirely surprising. But one thing is, going forward, it has been a bit of a catalyst for markets in the last day, and I would be watching, if you are monitoring the markets in overnight, I would monitor Bank of Japan bond buying operations going forward in the short term, just in case of any similar type price reaction. And so what I've got here is a table of those particular operations. So these are Tokyo times, so don't forget this would be overnight. So you've got the next one is a bond buying operation. They're purchasing in the, I guess the sort of mid part of the curve, the 1 to 10 year maturities. We're then looking at more short end operations coming on the 15th, and then as you can see we go on through the coming weeks and the rest of the month of January. So if you do need that, just ask me and I'll post it in the chat room again. So that's one consideration for overnight. Going into the European UK session, we have not a great deal. Eurozone industrial production is coming out at 10 o'clock. ECB minutes don't normally garner too much of a reaction, but just given the state of play at the moment, where we've obviously commenced 2018 and the volume of their monthly bond buying has dropped now to that 30 billion, just be interested to see what they think, particularly as well about their confidence on the inflation front. I'd definitely be interested to see the kind of depth of discussion around that point. Looking at the US numbers, then we start to get the build up to what is probably the biggest data point of the week, which is Friday for US CPI. So front running that as ever. You get the PPI numbers from the States 1:30 tomorrow, with your regular Thursday release of US jobless claims. Other things, Fed's Dudley is speaking on economic outlook, but that's going to be much later into the afternoon. And then again, another reason for to weigh on bond prices globally recently is not forgetting the kind of large amount of sovereign supply that's been coming to market. We've had a refunding round coming through from the US Treasury, which included a variety of different issuances. So we'll get a longer dated 30-year bond for $12 billion tomorrow night. We've also got the UK Debt Management Office coming to market with a longer dated $2.25 billion. And then you've got 5 to 6 billion euros worth of a 2020 and a 2024 BTP coming out of the Tesoro in Italy as well. So and not just another thing in focus at the moment, not so much for the guys trading other assets, but certainly for those monitoring the fixed income market closely, these will need to be considered. Okay guys, I know I've been monitoring your trades that some of you have been doing, and thank you for sharing in the live room. I've seen really excellent stuff, so well done. Grab yourself a beer this evening and relax, and I'll see you tomorrow morning. Thank you very much.